Hey, what's up, guys? My name is Ja. You can call me Patrick as well. So, I'm going to be talking about the fundamentals behind the yen's weakness and why it's been happening and what's been causing it. I made sure that everything's simplified and pretty much everything's in layman's terms. So, I hope you guys enjoy it. So whenever you're talking about a currency such as the yen, we're talking about the Forex market. Forex market is where all the currencies are being traded, and every currency out there in the world, it is backed up by a monetary policy, and monetary policy is enforced by its central bank. So let's talk about the dollar. So dollar is backed up by the Federal Reserve. Well, backed up is not the right word for it, but the policies that are enforced in the economy is backed up by the Federal Reserve. So, for example, the Federal Reserve has put out quantitative tightening since 2022 this year to fight inflation. That's been going on. And for Japan, they're backed up by the Bank of Japan, obviously, and that Bank of Japan has been implementing quantitative easing, unlike the other countries who are implementing QT. So we'll talk about them more soon. So let's talk about the role of yen. Yen itself is the third most commonly used currency in the world, first being the dollar, second being the euro, and the third being the yen. And oftentimes it was used as a hedge against the US dollar when the US economy was going through a recession. So one thing you have to know about these safe haven currencies is that they are expected or they actually increase in value when it looks like the world is coming to an end or there's some kind of war going on. Any geopolitical stress that's going to affect other countries, it will have some sort of impact on the safe haven currencies being bought up. Um, so yes, Swiss franc is another example of a safe haven currency. So is the yen losing its safe haven currency status? Let's talk about why and what's causing it. Um, the first issue is that, as you guys have seen, we have seen massive increase in energy price, right? Natural gas, just gasoline overall. And for Japan, they import all of its fossil fuel energy from outer sources. They don't make any of it. This means that they're just going to have to pay whatever the seller asks them to pay, right? So this is a big thing to note about Japan. And the second reason is that everyone else, including the US, Canada, are starting to raise the rates, which means that they are implementing quantitative tightening, unlike Japan, who's still implementing quantitative easing, which means zero interest rate. And this is very important because I don't know if you guys know, DXY, the dollar index, is actually composed of combined currencies such as including the euro, yen, sterling, pound, and the Swissy. I forgot the fifth pair, but dollar is actually composed of all these other currencies. Although euro makes up the majority of it, 14% of the DXY dollar index is made up by the yen. So if the dollar goes up, inversely, the yen will weaken um, as a result. So now let's talk about the economy of Japan before COVID and after COVID and how they've been functioning. So before COVID, obviously they were still implementing quantitative easing, which is having a low interest rate. And they faced no supply issues. China was not locked down, so there were no problems with manufacturing things as an exporter. As you know, Japan produces a lot of cars. They're the third largest manufacturing country in the world as far as the car goes. Also, the cost of fossil fuel imports were on the manageable side, which means they were able to pay off all the imports relative to the money they were making from the imports. So I explained a little bit more about the fossil fuel and why it's important. So after COVID, they were still implementing quantitative easing. So what ends up happening is that when all the other top country, G7 countries, are implementing quantitative tightening now, what does that mean? It's inversely going to weaken the yen currency It's just inevitable because the dollar index itself, I don't know if you guys really looked into this. Dollar index itself is made up of other currencies. You can just look this up on Google. And 14% of the dollar index is made up of yen. About 50%, a little bit more, is made up by euro for the dollar index. So what happens is that when the euro goes up, dollar goes up, everything goes up, it is just going to pressure the yen pair, yen currency. It is just going to naturally make it weaker, you know? So yen is just only going to get weaker unless they change something, right, within the policy. But that's what's causing it to get weaker. And also, they started losing its trade surplus status. So the thing about the trade surplus status is that you look at the imports and the exports. For example, let's say Japan had exported $10 million worth of goods, right? And then they made about $10 million in profit in their books. Let's say it's in their books now. And if they imported about $7 million worth of fossil fuel, they're still $3 million over because they exported more in terms of the price, right? But then after the Ukraine and the Russian war started, all this, I guess, pressure of the fossil fuel supply shortage going on, Japan actually started losing its trade surplus balance, which means they were starting to import more and export less. So as you can see, the unadjusted trade deficit expanded to 2.82 trillion yen, which is equivalent to $19.7 billion. Imports rose by almost 50% in value from a year ago, reaching a record. And this is all from importing crude oil, coal, liquid natural gas. So as of July 22nd, Japan is at negative 1.43 trillion in dollars in trade balance. So very important thing that you have to note about the safe haven currency is that they're typically backed up by a strong trade surplus. So if they're not backed up by a strong trade surplus, the investors, people, banks are going to lose faith in the economy. So we're talking about the Japan here, Japanese economy. So people are going to lose in the lose faith in the Japanese economy. So they're not going to want to buy up. It's not going to look so attractive to buy up yen anymore. It's just a simple fact. So why is Japan still implementing quantitative easing, or you can say a low interest rate? Is there a reason why? Do they have a different agenda? Is there something that we don't know? Let's talk about that next. So the benefits of having a low interest rate is that it lowers the cost of borrowing. I mean, it is very beneficial for an individual living in Japan or any company that is in Japan, because if they wanted to expand their company, or if an individual wanted to open a small business, and if they wanted to maximize their output by using the borrowed funds from the banks, they don't have to pay much back in comparison to an individual who's borrowing money from the banks in the States. So think about that. That's very beneficial. I ran a small business before, so I know how that feels. And the interest rate, it can pile up depending on how much you borrowed and how long you're going to take to pay them back, pay the banks back. Second, like this is something that most people don't understand because it is not too often, talked about. So quantitative easing, low interest rate, having a low interest rate, it is one of the solutions to fight deflation. And most people only know about inflation, but Japan has been fighting deflation for a very long time. And one of the reasons why Japan has been fighting it is that last year alone, 2021 alone, about 600,000 people passed away. And that reduced about that reduced the population by 0.5%. That is a lot. That is significant. With the stagnant wage gap, um, it is just not looking good for Japan, and the demand itself is not there. So, yeah. And the third reason is that by having a low interest rate, by having a weak currency, it is just it just looks attractive to the tourist. If yen's weakening furthermore, people from outer countries will maybe travel to, not just maybe, they will travel to Japan and spend their currency after exchanging it to yen more. Think about it. I would love to spend some dollars in Japan right now, given the fact that yen has been weakening. But just remember, the tourism sector is very small, but the service sector overall in Japan makes up about 70% of their GDP. So what are the solutions to all this for Japan or Bank of Japan? I'm not an economist. I'm not a licensed financial advisor. I'm just a retail trader who dropped out of Boston University. But anyways, so one of the things that BOJ can do is that they can certainly adopt a new monetary policy like quantitative tightening, just like the other top countries out there, to fight to make sure that yen starts gaining some strength. But this is a problem. In order for a quantitative tightening to work, the demand has to be there by the retail, by the consumers. But for Japan, like I said in the previous slide, the demand is not there. The population is declining. Japan has been fighting this population decline for some time now. For whatever reason, the society is not, the environment and the settings are not favorable for couples to give birth, and they don't want to give birth. That's why pretty much Japan, a lot of the married couples and just couples in general in Japan, they don't want to give birth. So they've been declining in population. So if the demand's not going to be there because the population's declining and the new age, the Gen Z generations are not coming up, then the quantitative tightening, new monetary policy will not work. So either they're going to have to work out things differently or make things favorable to the people so that they give more birth and there should be more benefits to them. Second, the Japanese government need to invest into new sources of energy or put more money into investing into it so that they become more energy efficient and sufficient. Nuclear energy is one of them, but I know that they had an accident recently, a couple of years ago, with their one of the nuclear plants, and it just, yeah, it's not good for the surroundings and for the land around it, right? When something like that happens, because they have a lot of earthquakes, so it is not looking too stable. It's not looking too favorable to create more nuclear plants in case of earthquakes. Or they can invest into renewable energy. I don't know too much about it, but that's about it. Two solutions out there. One of them are not really feasible at the moment because they don't have the demand for it from the consumers. But investing into renewable energy and nuclear energy is a possibility, or they just have to work out a better trade deal with the other countries.